Hey, what's up traders? This is Dave FX Hunter, and I quite like a situation on the USD JPY, so I decided to make a video after some break which I had in this summer. So let's start on the monthly time frame, and what we can see here is that price actually reacted nicely 2 times in this big monthly institutional level, and we had a nice run up. So the potential target could be these highs above these previous highs. On the weekly, what we can see, of course, the same thing, only in the different fractal of the price, and we can see this nice run up, then pull back, then some accumulation, creating new high, and then pull back to the institutional levels, where we're getting these beautiful reactions. So on the daily, again we have this nice reaction. So the price is quite low in compare of this range, and we can see in this 4 hours time frame again beautiful reaction, drop to the institutional level, and then sharp move higher. So it's of course breaking as well this trend line. So it looks quite nice. If we look to the COT data, we can see some nice pattern where basically on the USD JPY, that means that basically we had some longs that been closed, but still held quite big longs positions in compare of the shorts. And now we can see the longs growing again, right? So we went from the 72 to the 100k, then there was some drop last 3 weeks, which was in this accumulation phase. Where was that? Here. So we had this last 3 weeks, so we had the longs, then last 3 weeks nothing, and then drop back to this zone. So what we can see here is basically the net positions are quite growing, right? As well, here in the beginning of this year we had this flip which actually making us this bullish. So if you look to the dollar on the here on the other side, it of course looked that the dollar might be weak because of all this printing and the stuff, but the data say the opposite, right? So what we can see on the dollar is that basically we flipped, and we have now 16k net long positions on the dollar, with the 31k longs and the 15k shorts, right? And it was basically couple weeks ago, it's in the June, we had like a 30 to 30, and then 15k of the shorts was closed, while the longs has been added again. So dollar looks quite bullish for me, and as we have seen on this chart, the USD JPY is nicely under the control on the monthly institutional level, weekly institutional levels. Now we are reacting on the daily and the 4 hours, and as said, the potential targets could be these highs, these equal highs, where could be stop losses of the sellers. So let's check how looks the positions of the retail traders. So what we have here, we have the more people is trapped in the shorts and less people is in the longs, right? So most of the retail is shorting, so most likely it could go higher because the COT data looks positive and this looks negative on the retail side. So for me it looks like a nice opportunity for the long trade with some entry for the swing, of course, not for a couple pips. For the couple pips we use some scalping bots. So I think these highs, as said, could be taken out. If we go to the daily, we will see it even better, right? So these highs could be potential target for the next up move. So yeah, that looks good for me. I'm quite bullish on this one, and what I will be looking for is entry on the daily. Let me bring it to the 4 hours, but keeping the daily order blocks, and I will show you in the detail what I would be looking for. So What I need to see is would be the removal of this order block. So how that happen is I need to see new high here, right? So when the price comes here, these highs will be taken out. That means this order block is not valid anymore, and then I would be waiting for the pullback in the previous order block, which is this one. Why? Because here we had this drop. So in the theory is that in here was the positions accumulated for the next continuation up. So if this happen and price will pull back down in here, I will be looking for the long position, right? Of course, what could happen, what I could do even better is to go there with the very small stop loss, right? So what I could do is what I should do is, right, if my order block is 60 pips, I should do another 25% below that as the stop loss. So that would be like something like another 30. So let's say 90 pips stop loss, which is a little bit lower as well. So 90 pips stop loss below the range weekly low, with a potential target to the weekly order block, which one is here and another here, right? So I will need to close part of my position in here, and second part could be going into this weekly order block. However, I would prefer to take a profit on this whole number 112, right? So that could be a trade, and yeah, that looks good. It's a 2.98 risk reward ratio. That is quite good. All right, bye bye.